Assalamu alaikum wa rahmatullahi wa barakatuh, and a very good morning. Welcome to the session on IREIT, Islamic Real Estate Investment Trust. This is part of the panel discussion on Introduction to Islamic Finance and Real Estate. Firstly, I would like to congratulate and thank the organizers of Real Estate Expo 2025. And it's a pleasure for me to share this session virtually with all of you. And I hope this would be beneficial to the audience, to the participants of this session. Before I proceed, let me introduce myself a bit. My name is Yousuf Sultan. I have a master's and PhD in Islamic finance with a degree in Sharia and also a specialization called Takhassus in Fiqh and Fatwa, which is Islamic legal jurisprudence. I'm the founder and CEO of Real Advisory based in Malaysia, which is a prominent Sharia advisory company. We provide Islamic finance consulting, advisory, and training services to our clients globally. And I have also co-founded IFA Consultancy, another Sharia advisory company based in Bangladesh, where we have been providing the same services to the regulators and others. Personally, I sit in several Sharia committees, which are similar to boards, where we basically look at the Sharia aspects of the businesses. I sit in several banks globally. I sit in the Sharia committees of regulatory institutions, of NBFIs, non-bank financial institutions, funds, sukuk, which is an Islamic equivalent to bonds, mutual funds, then also real estate funds, as well as takaful, which is Islamic equivalent or alternative to conventional insurance, and others. Also, we are part of a number of fintech, Islamic fintech, based in blockchain, crowdfunding, robo-advisory, insurtech or takaful tech, and the likes. We are also affiliated with Securities Commission Malaysia. I personally am registered Sharia advisor with Securities Commission Malaysia, which gives me the license or the opportunity to advise for Islamic capital market products in Malaysia, as well as the Ideal Advisory is also a listed share advisor with Labuan Financial Service Authority, another regulatory institution in Malaysia, which gives us the privilege to advise different Islamic finance products, including financial institutions registered with Labuan. All right, in this session today, I want to give a very brief introduction to IREIT, or Islamic Real Estate Investment Trust. Before I go into the details, I want to give a glimpse of how the current Islamic finance industry looks like. If you look at this slide, Islamic finance industry has been growing tremendously over the last decade. And we have a projection of exceeding 6.7 trillion US dollar of the total Islamic finance industry assets by 2027. And when we talk about Islamic finance assets, it includes Islamic banks, Islamic insurance, Islamic capital market funds, stocks, equities, etc. And if you put together the halal industry includes halal food, for example, halal meat, halal beverages, as well as halal fashion, halal clothing, halal travel, etc., then the industry is even much bigger than this. When we talk about REITs or real estate investments trusts, this is something that actually originated in the United States. And it actually entities that possess, manage, or fund income generating real estate. This is the definition. REITs are basically some entities which possess or manage or fund income generating real estate. So the income that the investors get are actually coming from the real estate. It allows investors to access income generating real estate. So this is, for example, a typical REIT diagram where the investors basically put their funds into, buying some properties or managing some real estate, etc. It could be different types of offices, malls, spaces, etc., hotels. And from there are rentals or other types of income that are generated, and from which there is a bit of profit that are distributed to the investors. Some main types of REITs include public REITs, which are traded on stock exchanges. Similar to other funds, there are different types of funds which are also traded in the stock exchanges. There are also public but non-listed REITs. These are public, registered, but not traded in the stock exchanges. And there are also private REITs, which are for institutional investors only, and these are not listed, these are not public. If you look at the growth of REIT, as we know, from a very classic point of view, real estate is always considered a very stable investment, right? There are many types of investments today we have, which are often volatile due to issues, that the different circumstances, the prices go up and down, and the profitability are also impacted. Whereby real estate is something that are often considered very classic as well as very stable in terms of returns, in terms of retaining the value as well. Now, if we look at the total market capitalization, we can see that in 2022 it was valued at $2.6 trillion, and it is expected to reach $4.2 trillion by 2032. Now let's have a glimpse of what do we mean by Islamic real estate investment trusts. By now, you must have an idea of what we mean by Islamic finance. Islamic finance is basically a type of finance which filters out some prohibited elements that are prohibited by Sharia law, by Islamic law, by Quran and Sunnah and other authentic sources. Now, the same logic would apply in the Islamic real estate investment trusts. So these are basically REITs or real estate investment trusts, which are free from the prohibited elements. So if you look at the first point, these are basically Sharia compliant REITs investing in halal properties. Now, how can be a property halal, right? Property at the end of the day are bricks, are cement, basically rods, structures, right? How can we consider these as prohibited or permissible? The prohibition or the permissibility actually depends on the underlying utilization of the property itself. So if the property is being utilized for any sector or activity that are prohibited in Sharia, then the income generated from this property is also considered non-permissible. For example, wine. Wine is something that is prohibited in Sharia to consume, to sell, or to make money from it. Now, if there is a property which is utilized, which is rented out for a factory that produces wine, so the income from this rent will be considered impermissible from Sharia point of view. Another example, hotels. As we know, hotels typically are just for staying overnight, maybe. It could be utilized for businesses or various other activities. However, because hotels would typically also include wines, a spa, or some other things which may or may not be permissible by Sharia, right? Hence, in most international Sharia indexes, hotels are considered Sharia non-compliant or impermissible sector by default, unless there are evidence that the hotel is free from these prohibited elements. Now, if a property is rented out for a hotel, then by default, we will consider the rent or the income generated from it as impermissible. So if we know and we understand what are the prohibited business sectors or activities in Sharia, then any property that is being used for these prohibited sectors, the income generated from it are generally considered as Sharia non-compliant or impermissible. So in general, in other words, Islamic REITs would be providing funds or investments for properties which will be utilized for Sharia compliant purposes. And let me tell you one thing. We have a very few prohibited sectors or very few prohibited activities. Interest or usury, for example, I mentioned about wine, tobacco, hotels, and there are some entertainment industries, mostly adult entertainments, and the likes, pork or any pork related ingredients or food and beverages, for example, these are prohibited. But other than these, bulk of the industries, uh, be it technology, healthcare, and many other industries, these are all Sharia compliant or halal. In Sharia, the default rule is permissibility unless and until there is a evidence that that particular sector or business activity is Sharia non-compliant. All right, let me come back to the slide. So Islamic REIT was first introduced in Malaysia. As you know, Malaysia has been the forefront of Islamic finance for the years, for the past several years and or decades, in many aspects. So Malaysia has been a pioneer for introducing Islamic REIT. And what Islamic REIT does, it avoids the prohibited elements, as I mentioned, for example, riba, which is interest, gharar, which is excessive uncertainty that is not permissible by Sharia, as well as other haram. Haram means prohibited industries. Now, one very important thing whenever we talk about anything Islamic finance, anything Sharia compliant, the very important aspect is to ensure proper Sharia governance. Right? When we talk about Islamic REIT, for example, who ensures that it is Islamic? Who ensures that the principles of Islamic finance or the principles of Sharia law are being adhered to? Right? There must be a body, there must be a number of organs that are working together to ensure that. And it starts with the Sharia committee itself. Remember, in the beginning, I mentioned that I sit in a number of Sharia committees across different financial and non-financial industries. So the responsibility of the Sharia committee is kind of similar to the board in the sense that it takes some major decisions which are binding on the entity. But these decisions are specific to the Sharia compliance of the business. For example, can the REIT invest into a very particular industry or business, for example? Who should give this, approval? Sharia committee is responsible for that. So Sharia committee will help coming up with a guideline, with an SOP for the REIT, Islamic REIT, to ensure that it invests in a Sharia compliant manner, and it will also ensure on an ongoing basis, on a continuous basis, that the entity is adhering to these SOP or principles and ensuring that it is free from Sharia non-compliance. Typically, when it comes to Islamic financial institutions, we will also have a Sharia audit. It could be annually, it could be every 2 years or every 3 years, depending on the scale of the fund or the entity. And the purpose of the Sharia audit is also the same, just like we do financial audit through an external party. Why we do it? To ensure that the integrity has been maintained. Likewise, we do an external Sharia audit by a third party to ensure that the Sharia compliance integrity of this particular product, which is in this case our Islamic REIT, is being taken care of. Right? So we also have ethical and faith-aligned investment opportunities. So basically, when you talk about Islamic REIT, on one hand, we are talking about funders who are funding the REIT itself. So the fund mechanism of the funding should be Sharia compliant. It cannot be an interest-bearing loan. It must be structured into an investment which has the profitability, as well as there is an option, there is a possibility for loss, meaning the investors take real risk of loss. As well as on the other hand, when we talk about the destination of the fund, where the fund will be deployed, where the investments would be made. As we have mentioned, the properties or the utilization of the properties must be Sharia compliant or halal as well. Take this structure, for example, it is taken from Bursa Malaysia. Bursa Malaysia is the stock exchange authority of Malaysia. And here you can see we have investors. So investors are putting their funds into this IREIT, which is the Real Estate Investment Trust. And the IREIT is managed by a fund manager. And the fund manager would typically charge a management fee, and it is also taken care of by a trustee, and there would be a trustee fee. See, here we have a Sharia advisor, which basically oversees the Sharia compliance aspect of the REIT, Islamic REIT, and ensures that the Islamic REIT is adhering to the Sharia principles when it comes to the investments. Now, when it comes to the properties are chosen with proper due diligence, including Sharia compliance, and there could be property managers as well, which are paid management fee or maintenance fee. And finally, there would be tenants from which we'll get the actual income, which are basically through the rentals. And these rentals would be basically translated into net income into the IREIT, and finally, the returns will be transferred to the investors. Um, the IREITs basically collects funds from the investors. As I mentioned, the fund collection should be in a Sharia compliant manner. It acquires halal commercial or residential assets, which I mentioned earlier. That halal here is basically based on the utilization of the asset itself. It will also rent. It can rent to the Sharia compliant tenants. And finally, it will distribute the halal rental income. Halal means permissible, and it will also maintain Sharia integrity through Sharia screening by the Sharia committee as well as Sharia audit, which I mentioned. In terms of the features, the conventional REIT and Islamic REIT, basically the main difference is the Sharia aspect. So conventional REIT may, follow the regulations of Securities and Exchange Commission or other regulatory guidelines or regulations that apply to. And Islamic REIT will have an additional regulation, which is basically the endorsement or the approval by the Sharia committee. The tenants that are allowed in conventional REITs are any legal business. In Islamic REIT, it would be only Sharia compliant. Revenue purification in conventional REITs that are not required. In Islamic REITs, it is mandatory. It means, for example, if we rent out to a business which has mixed income, meaning some of the businesses are Sharia compliant, but there are some non-compliant businesses as well. In such case, we have to purify the revenue. What purification here means is that we have to come up with a ratio based on the best assumption or based on some data that we have obtained from the financials. And we have to take that portion out from the revenues that we have earned and give it to a charity. So that's how we purify the revenues. Sharia audit is not applicable for conventional REITs, which is well understandable, but it is usually conducted regularly by Islamic REITs. Prohibited sectors are permissible for conventional REITs, but not permissible for Islamic REITs. Now, following demand, what we see in North America, that North American Muslims communities, in many cases or several cases, we have seen that they have responded by launching Islamic investment products. We know about Islamic house financing, and there are several different types of investment products that are also being launched. And this is where we see that there is a potential growth potential for the Islamic REITs. As you know, in these North America, when it comes to the 401k funds or different institutional funds or individuals who are looking for share compliant profits as well, they look for such opportunities. And as real estate is always considered something very stable, so there is always a high market demand, particularly when it comes to, in the face of global trade and other economic turmoil that we are looking at now. And there are high potential for such Islamic REITs. We found some Islamic REITs in operating in North America, particularly in the United States. We didn't bring the names in the slides. We have just two remarks. Firstly, we appreciate that there are a few, Islamic REITs which we have seen they have launched, but on the other side, we haven't seen a Sharia approval, which is also known as fatwa, an endorsement by the Sharia committee or the Sharia scholars, eligible Sharia scholars or certified Sharia scholars, who would endorse that the particular Islamic REIT is Sharia compliant. So that definitely is a Sharia governance gap. And we hope that in future, whoever launches Islamic REIT would take into important consideration. So with that, basically, I would like to conclude my session, and I would like to invite questions at the same time. If you're interested to come up with an Islamic REIT or any other property-based, real estate-based Islamic finance solutions, then we would be happy to support you from structuring as well as reviewing and endorsing from based on international Sharia standards, which would be acceptable by Muslims globally, hopefully, inshallah. And we hope that the North America will see more and more Islamic finance products to cater for the growing Muslim communities and the non-Muslim communities as well. Remember, when we talk about Sharia compliance, it's not about talking about something only for Muslims, but it is all about being fair, being ethical, being sustainable, not for the people only, but also for the environment as well. So with that, I would like to conclude my session. Thank you so much. Good day and have a good day. Assalamu alaikum wa rahmatullahi wa barakatuh.